Good morning. I would like to welcome everyone to our second Texas statewide virtual program. My name is Melinda Jackson, and I'm an Executive Vice President at Cadence Bank and a board member of the Houston ACG chapter. In a moment, I'll hand over today's program to our speaker, Brett Palmer. Before we get started, I have a few chapter announcements. First, I'd like to thank our chapter sponsors who have continued to support ACG. We are grateful to the chapter sponsors from Austin, San Antonio. Thank you to the Dallas Fort Worth Dealmakers Series sponsors. And finally, our chapter sponsors from Houston. As you can see, we have a diverse and supportive collection of sponsors across our state. A few housekeeping notes before we get started. If you have a question for Brett, and I'm sure you will, please use the Q&A box at the bottom of your screen. Daniel Border from the Dallas chapter and partner at Whitley Penn will be moderating a Q&A session after Brett's presentation, and he'll do his best to address the questions that come in. At 11, we'll be switching over to the networking portion of today's event. Closer to the end of the conversation with Brett, we'll post the link to the Zoom meeting in the chat box. It is not the same link you used to join this webinar. Please copy the link, exit the webinar, and then paste the link in a new window to join the Zoom meeting for networking. You will also be receiving a link in your email, or may already have it. So it's top of your inbox, and it's from Christy Roberts with the right link. We will be recording today's webinar. We'll be sending out an email with a link to view the webinar as soon as it's posted. Now, I'd like to introduce our speaker, Brett Palmer. Brett is the president of the Small Business Investor Alliance. In this role, Brett works to foster a healthy environment for small business investing and a strong and profitable lower middle market. Brett brings years of valuable public policy experience to SBIA. I've seen firsthand how he and the entire SBIA team advocate for middle market companies and the groups behind them, really the companies creating jobs in the US. He served in the executive branch as a presidential appointee in the Commerce Department as Assistant Secretary for Legislative Affairs and as Deputy Assistant Secretary for Trade Legislation. He served in a number of roles in Congress, including as a policy aide for the Speaker of the House. Brett graduated from Davidson College with a degree in history. Let me turn it over to Brett.
Thank you very much, Melinda. I appreciate that warm introduction. When I was in those government positions, some of them were working for Texans. I worked for Secretary Don Evans, a good West Texas man, and a fellow named Bush from Texas as well. So a big fan of Texas and very thankful to Texans. Thank you for having me today. I'm going to be taking you through what's going on with the election, what it means for the lower middle market and the middle market, and what you can do to sort of interpret the headlines as far as what is developing and what it means for your businesses. So let me start my screen share and start taking you through it. Again, I welcome any questions that you may have. So feel free to use that chat feature to ask them. These questions will be anonymized, so you don't have to say who you are when you're asking the question. It's normally, impolite to talk about politics in a business setting. This is actually the exception to that rule. Politics do affect your business and investments that you're going to make. And so this is the place to ask those questions. And you don't have to be an expert at politics or have any particular political leanings to ask that question. So feel free to ask them. As Melinda mentioned, SBIA is a trade association of private equity funds. We're focused exclusively on general partners and limited partners, and then allowing them to raise capital, allowing them to find deals, allowing them to have a voice in Washington to tell their story about why good public policy helps create jobs and the important role that private equity plays in that. And so I want to thank you for giving us the chance to share what we're doing and answer your questions. So we just had an election. You may have heard about it, and you may not, probably haven't been able to escape it. And a lot of this is pretty clear now. We know that before the election, the Democrats controlled things. They're going to control things in the House again in 2021. On the Senate side, the Republicans controlled the Senate up until now. They may or may not control the Senate going forward, depending upon these two races in Georgia. But the worst that they can do is a 50-50 split, which is still a pretty strong position. On the presidential side, we've had President Trump. It's all over but the shouting. He lost. He lost a decisive election. As far as the Electoral College goes, yes, there were a lot of states that were close. No, those states aren't going to flip. No, it wasn't wasn't affected by fraud. No, this was not a stolen election. You know, whatever the hyperbole and drama around it is over. It's really just working our way through the next little bit. But how that election played out really does affect policy and where policy is going, particularly economic policy. So a couple things just as a matter of perspective and sort of giving you some constructs here. The election was played out largely the way the polling made it out to be. The margins were very different from what was expected. Some states were significantly tighter than expected, Texas being one of them. Some states the only state that was really a meaningful surprise was Georgia, but it wasn't that much of a surprise. It was inside the margin of error, but it was really pretty tight. The Senate side was, again, not a lot of surprises there. The Democrats lost a seat in Alabama. It was a seat they weren't likely to win in the first place. They won it last time largely because the candidate running on the Republican side had all sorts of baggage that this time they did not have as an opponent, and that the opponent therefore won. But things largely broke down where they expected to be, with, again, the sole exception of Georgia, which has been trending Democratic for the past couple cycles. The Republicans won more seats, more votes in both of those seats, but it got less than 50%, so they'll go to a runoff in January. Normally, runoffs don't matter that much, but in this case, the Republicans have cemented a 50-seat foothold for the Senate. If they can get at least 51, that means they control the agenda for the Senate. If it ends up being 50-50, Kamala Harris, as the new vice president, will be the tiebreaker, putting the Democrats in charge. It's worth mentioning here that in this election, which was a close election, it was a huge election, the highest turnout, both in absolute numbers as well as percentage, highest in absolute numbers ever, highest percentage of voters in over 100 years. Trump won more votes than any presidential candidate in American history, with the sole exception of his opponent this cycle being Joe Biden. Any other year, this would have been a massive blowout win for him as a candidate. In this case, it was not, because turnout was so big. But it's worth noting that Trump significantly underperformed most Republicans in those other states. For example, Maine, where you had a Republican senator who was really thought to be on the ropes, she won by +8. Trump lost by 7. You had that up and down the ballot where there was a lot of independent voters who were voting for Biden as a presidential candidate, and yet were voting for Republicans in Congress. But that being said, if you really put it in a sort of a national context, if you had 100 people in the room, a huge number of the votes would have been decided by a 50-50 vote and a coin flip. It was a really tight election. The American people are highly divided, and I'm going to get sort of some images here to show you that. So this is what the map looks like right now. The Democratic pickups in the Senate were Arizona, with a conservative-leaning Democratic candidate in Senator-elect Kelly, but he was very liberal on guns. His wife was shot and nearly killed. That really drove him. But Arizona now has 2 Democratic senators, where historically that was a very Republican-leaning state. Colorado, a very good senator named Cory Gardner, who was very good for our industry, lost. It was part of just a general anti-Trump wave that existed out there. But by and large, not a lot of surprises. But one of the things you can look at as you look at the national map is just how much of the Senate, and this is a common trend, is from single state parties, single party states. So you have a whole lot of states that are solid blue or solid red. The purple ones have 1 Republican and 1 Democrat. Not a lot of them. They also tend to be a bit of the swing states, with the exception being of Montana and West Virginia, which really aren't, and Maine to a lesser extent. On the governor's side, very much status quo, with the sole exception being the Republicans picked up a seat in Montana. I mention that because state laws do matter a lot. And when you look at the breakdown of the states, you can see again, there's a very strong tilting of Republican versus Democrat. This is not a new theme. It's really become calcified and more locked in than it has been in the past, but it's some common themes here. And as we are operating in the midst of the worst pandemic in generations, and the different approaches the governors have taken, you see some differentiation there. You also, frankly, have a massive amount of power and policymaking that happens at the governor's level that does not happen at the federal level. The governors have more direct responsibility, more direct feedback loops as far as accountability on the decisions they make. And so there, as this pandemic is working its way through, and they're having to make very difficult, excruciating decisions on health policy and economic policy that are sometimes in contradiction, you really do have some differences there. On the state legislator side, it's noteworthy that while Biden overperformed at the national level and did very well and won, there were about 100 legislative pickups that the Republicans had in the state houses. And it was the most stable state house election since the 1940s. So very stable, very consistent. Nebraska is great out there because they have a unicameral, technically non-partisan legislature. But again, you don't have a lot of splits, don't have a lot of takeovers. So the trifectas are where you have House, Senate, governor. You can see that there's a whole lot where there's consistency. So the American people are highly divided along partisan lines. And that's not new and not a surprise, but it's gotten more intense, particularly for an election that had the largest absolute number of voters ever. And having been involved in numerous campaigns myself, having been involved with the committees that write tax law, election law, having worked for the chairman who wrote the laws that changed the election laws after the Bush v. Gore debacle in Florida to try to improve the laws. I know a lot about this. And this last election, given the volume that happened, probably was the smoothest, most functional election that we've had in my lifetime. So despite the allegations, which are really designed to destroy confidence in the outcome, and people might have personal reasons to do that, a little bitterness here and there in a tightly done election, it really went surprisingly well, and far better than I think anyone expected. But to put it again in perspective, the balance that's here, and this balance, I just want to sort of tee this up because it goes to the policies we're about to get into. Really, you don't see overwhelming blue, overwhelming red. We're tightly divided at the local level, at the legislative level, and even in the Electoral College. You do have some geographic splits. This is what the Congress looks like on a sort of a state-by-state basis. I like this visual that I was able to pull from Politico, because it takes away sort of some of the geographic dispersions that over-amplify the importance of tiny states like Montana, even though they have lots of land. But it just sort of shows that it really is a dividing political geography that exists. And most of that is urban versus non-urban. Rural areas are almost entirely Republican. Urban areas are almost entirely Democratic. I think the biggest city in the United States that's got a Republican mayor might be Oklahoma City. But the rest, the Republicans have largely abandoned most big cities that are out there, and they're non-competitive. And the same thing is true to Democrats to a certain extent in the rural areas. And both of those have policy implications in a number of ways. But the state elections matter, and there really were some interesting developments that happened in the state elections that do affect issues that some of you are dealing with. Something that I never 20 years ago thought I would be dealing with is talking about legalization of marijuana, legalization of magic mushrooms and other hallucinogenic drugs. But largely, a lot of the decriminalization or legalization of drugs on state referendum has picked up very significantly. And we get a lot of questions from all sorts of people about where they can be as far as dealing with those issues. Banks have problems with it. Companies that are providing services to them. That's going to grow as a problem. There doesn't appear to be any consensus among Congress of figuring out how to fix this. But on the state side, it tends to be that the state ballot initiatives have moved very much in that way. You do have some economically interesting state initiatives that passed. You had a significant increase in the minimum wage that happened in Florida. That's phased in over a number of years, but Florida is a Republican-leaning state. It's a very large state, and as more and more states are raising their minimum wage to $15 an hour, even if it's over longer periods of time to phase in, it makes it easier to create a national increase. Similarly to what is historically, I mean, my first minimum wage when I was working was $3 an hour, so $15 an hour, in teenage, brat years would have been inconceivable. But you also had some interesting ballot initiatives where unions, quotas, and tax increases were voted down in California, which is a very democratically leaning state, which is known as being highly regulatory. But on ballot initiatives, they may have voted at their congressional level or at their state level for a lot of very progressive candidates. And when on the actual specific policy matters, those got voted down. That was also true in Illinois, where they voted down a significant tax increase, which was skewed towards the upper income brackets. So you really had a number of issues where the Democrats and the progressives really underperformed at a national level, with the sole exception of Biden, who is far more centrist than the political caricatures that are put out there to wedge people one way or the other would indicate. But I mention that because those are telling of the divide that exists out there. Again, Trump went one way and underperformed. He really should have won. He's the king of unforced errors, given he had what he was able to achieve and had so many things going for him. But he blew it. But the other Republicans really broke historical precedent by getting a more center-right agenda, getting them elected. So now the election is over. There's been a lot of discussion about the Electoral College, in which probably most of you hadn't thought about since you were in high school taking civics. But that's working its way through the process. They're going to certify the election. It's going to get done. There's a lot of drama about it, but it's all over but the shouting. You'll get the safe harbor decision on the electors by early December. The electors will meet on December 14th. They'll seat the new Congress in early January. What's noteworthy is that the Georgia election for those two senators doesn't happen until January 5th. So they may not even have the answer or the outcome of those races before they formally have Congress certify the vote for president. And then you'll have President-elect Biden sworn in as president on January 20th. That's going on. So the transition, which again, there's a lot of discussion in the media and hyperventilation that, that the General Services Administration hasn't allowed the transition to happen. The transition's already happened. The Biden administration does not need, the incoming Biden administration does not need permission to organize themselves. They are moving forward with that. They're not allowed in the government buildings. Okay. They're not allowed to get certain data. Okay. But they're already getting their people in place, many of whom are already experts on this. And I will tell you that in my conversations with the Biden transition team, their emphasis has been on competency and trying to go back to sort of the no drama Obama model of management, where you really aren't going to be seeing people fired by tweet and policy created by tweet, but more of a deliberative process going forward. But they're moving along with that. And that's important because people are policy. As when you look at a divided government, and if the Republicans are able to hold the Senate, and even if they're not able to hold the Senate, you still have a couple of conservative Democratic senators who aren't going to let extraordinarily progressive legislation get through. It's already forcing a change towards centrism in the Biden transition, where when they're picking people, they're not going to be picking hard left Elizabeth Warren, Bernie Sanders types to run these positions because they're not these senior positions because they're not going to be able to get through. And so that's noteworthy. And if the Republicans do hold the Senate, they'll be forced to be far more centrist than they otherwise would be, not just a little bit more centrist, to get through that confirmation process. Now, I will say that Trump took the confirmation process and the ability to use acting positions to a level never conceived of in American history before. And once you've broken those norms, the next person can do that too. So it would not surprise me if President-elect Biden, once he's in office, does use or abuse that the way the current administration uses or abuses that filling position. Those senior positions under the Constitution require the advice and consent of the Senate. How much of that happens, we'll see. but those people mean a lot, and they're actively moving to fill those slots. And so here's an example of some of those positions that are opening up. So for example, as it relates to the Securities and Exchange Commission, which is an incredibly important government agency as it relates to private equity, not just private equity, but certainly to private equity. Jay Clayton is currently the chairman. His term technically expires in June. He's announced that he's leaving by the end of December. And so then you will have a split in the commission. So you really won't be able to move anything that doesn't have overwhelming bipartisan support. And frankly, very little has overwhelming bipartisan support at the SEC. Biden will get to put someone in that seat, and they will then control the majority and be able to move things along. That means the deregulatory approach of the past couple of years is going to disappear. You had, during the Obama tenure, the criticism of the Obama tenure of the SEC was that it was all about investor protection at the expense of capital formation, because the SEC has a multi-mission, including capital formation and investor protection. You can do both, and they should do both. The criticism of the Trump administration was that there's too much towards the capital formation and not enough to investor protection. You know, it's always a balance or a mix of those things, but that's a big one that's relevant to our part of the world, and will have an effect on some of these new finders rules that are coming out, some of the disclosures that are out, and I'll get into more details on that in just a little bit. On the Treasury Department, Secretary Mnuchin was a key player in the Trump administration, very actively involved in creating all sorts of policies that affect the lower and middle markets. He will be going away. There are a number of people that are in line for those positions that Biden has already lined up. You're going to get that moved through. One of the least talked about positions that will be vacant, which will be incredibly important to a lot of small and medium-sized business, is the CFPB, the Consumer Financial Protection Bureau. This is under Obama was extremely controversial. It was controversial a little bit under the Trump administration. It surprised me to hear when Trump took over how many private equity funds called me and said, hey, I've got these portfolio companies that were having these unimaginable headaches, not because they were doing anything wrong, but because there was just concern that they might be doing something. And so they were they were sort of frozen by the CFPB. So any businesses that deal with leasing or any type of, even if they're not the ones doing the leasing, if somebody else is doing the financing for the leasing, may actually have some interesting troubles depending upon how that position is filled, because that can be an incredibly powerful position. And there's a certain element to it of guilty until proven innocent. So that matters. The Small Business Administration, which matters more than a lot of folks realize, really is going to have a significant change. But there's a far greater bipartisan support of the Small Business Administration than there are for some other things. The key people in Congress, largely on the Democratic side, are not going to change. If the Democrats control the Senate, if they win those 2 seats in Georgia, which is absolutely possible, not guaranteed for either side, but it's possible, Sherrod Brown, an old-fashioned, progressive, pro-labor senator, would become the chairman of the Banking Committee. If the Republicans win the Senate seat, Pat Toomey, who absolutely understands private capital, private credit markets, private equity markets, small, medium, and large, and venture, he would run it. So he would very much understand our part of the world and understand it well. On the tax side, you likely will have a Democrat, Ron Wyden of Oregon, old-fashioned progressive with a passion for progressive healthcare policies, and that's a committee that oversees Medicare as well as taxation. Will be in charge there. On the Senate side, you may have your senator from Texas end up running the tax writing committee, but we'll see. It may be Senator Crapo of Idaho. The House Financial Services Committee, Maxine Waters, progressive from California, will run that committee. That will be run on the House side, on the Republican side, by Patrick McHenry of North Carolina. Ways and Means Committee, Massachusetts liberal Richard Neal would run that tax writing committee. You have a Texas conservative on the Republican side who would be the Republican counterpart and will be the minority person there. The Republicans have zero chance of changing anything as far as the control of the House. Senate Small Business Committee, again, not a lot of change there, and they're working through it on the House side as well. So small business got a lot of attention this last year because of the Corona disaster and the COVID disaster. The PPP was a really big deal. President-elect Biden has said he really wants to make sure that small business is taken care of. We can get to this in the Q&A section, but how a package gets, the next package gets formed. These are some of the things that really matter to him, as particularly getting more funds to smaller businesses, more funds to underserved communities, make sure there's more to people who've suffered historical racial discrimination that felt they got left out of the first PPP round, making sure that's a priority. It's worth mentioning again that we have this divided government more than likely, and if the Senate does go Democratic, it won't go Democrat far. It means that the new administration is going to really have to focus on their regulatory powers because Congress moves slowly, and they may or may not give any more powers, whether they be tax powers or regulatory powers. So they have to use their existing powers. And so clearly, social justice, whether that be racial, environmental, and others, is a priority for President-elect Biden. And so I think you're going to see coming out of the SEC, but not just the SEC, more disclosures as it relates to board diversity, more disclosures as it relates to lending and the race and gender and geographies of those sort of things. You're going to see a push to use the authorities they have under HUD for discrimination in housing. You're going to see the CFPB and the banking regulators looking at consumer lending and discrimination there. You're going to see it in insurance as well and underwriting other areas. You're going to see a push from the financial services regulators to make sure that minority development institutions and community development financial institutions succeed and grow and are given more power and more money. You're going to see all sorts of things along those lines. And particularly one that's noteworthy is the Fed, which has a very significant amount of power on these things. The Fed was dipping their toe into these social justice issues during the Trump administration, with some checks from Congress and some concerns from Congress. If when President-elect Biden is sworn in, he will be far more supportive of the Fed taking actions that address some of those historical problems that we have to move forward. So and some of that will be controversial, some of it won't, but it's certainly something that's going to be on the agenda. So some of the things that I think are particularly relevant to our part of the market is, Dodd-Frank didn't go away. It was modified a little bit, it was changed, it was tweaked here and there, but largely the implementation of Dodd-Frank changed. And I think you're going to go back to the sort of the no drama Obama model, more of a sort of slow, steady, deliberate model with a very significant progressive tint, going back to Dodd-Frank and systemically important institutions. Again, you're going to see a re-empowered, re-energized CFPB, heavy focus on board diversity and company diversity, a significant focus on underbanked and underserviced populations, both from the banking regulators as well as others. So that's going to be an important part for them. And then bankruptcy reform is going to be a big issue in how bankruptcies are handled. Certainly, we are only in the first order impacts of this economic calamity caused by COVID. We're all clearly looking at a very ugly and scary and deadly winter with a reemergence of the disease as people have gone back inside. And that is going to have very significant economic impacts, regardless of what those state governors do as far as shutdowns. People will be shutting themselves down and changing their own habits, regardless of what the government does. The government can basically say do it. That doesn't mean people are going to do it. Some people are going to continue to ignore the health guidance. A lot of folks are going to go the other way, even if there is no health guidance. But that has been extremely disruptive. And it's certainly, there are a lot of businesses that are going to fail because of it, and some that are going to succeed. You have right now the Trump administration, who's been really, these are just some of the other sort of issues that are out there. We know where they've been on limiting, been more of a laissez-faire activity as it relates to finance. That's not true of tariffs and taxes. I'll get to a little bit where they've been extremely anti-laissez-faire. But without a strong mandate from Congress and a strong majority in Congress, you're not going to get some big changes to the Federal Reserve actual underlying laws. You're not going to get major changes to Dodd-Frank in their laws. It's just an implementation. On the M&A side, which is particularly relevant to our world, you're going to see on the Biden administration, a far more stronger take on scrutiny of competition and anti-competitive practices as far as M&A goes. That is something that has been percolating, and on a bipartisan basis. I think you're going to see a lot more bipartisanship as people go after bigger and bigger companies. When you put big in front of something now in Washington, it's a slur. So you'll see more of that. But you're going to see, as it relates to healthcare, surprise billing and other things. But again, M&A lookbacks, particularly on the bigger side of things, but that could absolutely drift into the middle market and maybe even a little bit into the lower, but less so. On the taxation side, clearly a difference of opinion on the tax side. The Trump administration lowered taxes on the corporate level very significantly. Biden is proposing very significant corporate tax increases, particularly on people making an individual tax increases on those making over 400,000. There is zero chance of those tax increases happening if the Republicans hold the Senate. If the Democrats win 2 of those seats in Georgia and get the simple, even though if it's a sliver of a majority, you will get tax increases because you don't need a 60-vote filibuster-proof measure. You don't need to get rid of the filibuster to raise taxes. They go through a process called reconciliation, and I'll spare you the details, but they'll be able to do that. But because you have several conservative Democrats that are in the Senate, it will be skewed more specifically towards healthcare and funding healthcare, and it'll be skewed more towards the upper brackets. They won't be across the board brackets, and it'll be a little bit less punitive. Again, you'll see some looks at increasing minimum wages. That gets easier as more and more Republican states have them that are similar. It's just not a battle worth fighting. But again, I think that's going to be hard to do under a Republican Senate. And then on the labor union side, one of the things worth remembering is that Biden really sharpened his teeth during sort of the later heyday of unions. And so he's an old style union guy. And so I think you're going to see more union-friendly approaches, and aggressively so. He's going to be very limited by his ability to get congressional support for most of those, even if he has a Democratic majority that's small. But you'll see it from a regulatory side, you'll get a lot more there. Housing, again, we'll jump ahead on. I did notice there are a number of bankers in this call. So one of the things I'd mentioned is that the Community Reinvestment Act is certainly something that the Trump administration and their regulators on the banking side, several of them made it much clearer, made it simpler, more formulaic, less black box and less arbitrary. The Federal Reserve fought that tooth and nail. And so it's expected the Federal Reserve will take their own approach to the Community Reinvestment Act, which could affect the way banks lend, particularly the very large banks. Housing discrimination, I touched on a little bit. On the tariff side, Trump put tariffs in everywhere. Trump loved tariffs. He said he loved tariffs. Extremely disruptive to a lot of businesses. In some cases, that was helpful to a number of niche businesses. It was incredibly destructive to a lot of other businesses. There was hope from a lot of folks that with the Biden win, a lot of those would go away. I would not hold your breath for that. Once they're in place, it's a bargaining chip that will stay until you get something else for it. And so again, both of them have a very similar America First. Both are going to be very tough on China. Both of those have very strong bipartisan support for, even if their parties hate each other, they kind of agree on that policy. And so I wouldn't expect a lot of positive activity on tariffs. However, the big change will be, I do not expect any more willy-nilly tariff by tweet surprise, tariffs. They'll go through the normal process. They'll be deliberate. You'll be able to see them coming, and not just companies getting blindsided by them. Immigration is obviously a very big issue in Texas. It's also one where there's clearly a differentiation between the two. Trump was unable to get any legislation through as it relates to immigration. Biden will probably have great difficulty doing the same thing. He may be able to get some, but he'll be able to undo pretty much everything Trump did on immigration because it was done by executive action, and he's the new executive. Drug prices, we can get into later. But this is the last slide I'll have, and then I'll turn it over to questions. I've gone on over a little time, so sorry about that, Daniel. But this is a calendar of the expiring tax provisions. And this matters. SBIA is the voice of private equity in Washington. Private equity funds have to have a voice in Washington. If you do not, you will get creamed. Smaller and medium-sized private equity funds cannot sit back and ride the coattails of the mega private equity funds that are seen as Wall Street and in Silicon Valley. That is a losing political argument. And we have been very successful in killing lots of bad legislation that would have come through, because everyone in Washington and media thinks that private equity funds are all managing multi-billions of dollars, and that they're all flying around their own private jets and rich as can be, and doing giant hostile takeovers, which is not how our market works at all. And so we have to tell that story. So I would encourage you to join SBIA and be part of that. But here are some of the examples of what's coming and roles we've played. So at the end of 2021, you're going to get EBITDA, the limitation on the deductibility of interest expense going from EBITDA to EBIT. We were able to make that change. Originally, a couple of years ago, when they were doing the tax package, they were going to get rid of the deductibility of all interest expense. That have been profoundly destructive, particularly to smaller and medium-sized businesses. We were able to get it to that 30% number. We were able to get it to be EBITDA as opposed to EBIT. But to sort of make the budget work, they had to phase out the DA part, depreciation and amortization in the last couple of years. That expires at the end of this year. We have to get that extended. If we begin to start chipping away at the deductibility of interest expense in a meaningful way, it dramatically changes the way that businesses are allowed to finance themselves for growth, how you're allowed to do M&A activities and things along those lines. On the companies that are very high tech and doing a lot of research, and many of you may be doing that, the research and experimentation costs at the end of this year will now have to be amortized over 5 years as opposed to full expensing immediately. You also have a number of provisions as it relates to short-term life, full expensing for short life businesses. You have independent individual income tax rates that are going to pop around here and there. But we have to get ahead of those. These things don't just pop up and say, hey, let's just not do that. We have to collaborate as an industry and tell our side of the story to make sure that happens. Because as they're looking to pay for this, it's things like carried interest. Even though it doesn't raise much money, if you were to get rid of carried interest, you would dramatically hurt smaller funds that are in the sub-billion-dollar range, and fund managers to be able to operate. So here's a sample of those. It's worth taking a look at. And so Daniel, let me hand it back to you. Let me thank ACG for having me today. And again, please feel free to ask questions. There's no bad question, and you don't have to. You can keep it anonymous if you like, as it relates to questions that you may want to ask. So with that, I'll turn it back to you, Daniel.
Yeah, thank you so much, Brett. That was a fantastic presentation. Really appreciate your insight there. Hello, everyone. My name is Daniel Border, and as Melinda mentioned, I'm the Transaction and Advisory Services Partner for Whitley Penn, located in Dallas, and I serve on the DFW ACG Board of Directors. So I'm now going to go ahead and lead a Q&A here for the next 25 minutes. So let me start off first, Brett. You talked a lot about the election really isn't over yet, and so much is kind of riding on the outcome in Georgia. So pull out your crystal ball here. What are you thinking is going to happen in Georgia? Is it going red or is it going blue? And in general, kind of what surprised you about this election? And you're on mute right now.
I worked for a congressman from Georgia. I worked for Newt Gingrich, the Speaker of the House, and I've done some work in Georgia elections. Georgia has been trending as the South has grown. It's not just Georgia that's done this way, but the urban centers have grown, the populations have grown, and the more urban an area is, the more Democratic it votes. And so it's been trending more Democratic for a while. So I'm not surprised at all by the closeness of it. You have the Republicans that underperformed by a little bit. One of those races going to a runoff was not a surprise because it was a three-way election. The way they do it in Georgia is a little funky. But the former Governor Perdue and Senator Perdue getting 49.99% of the vote was a bit disappointing because then this would have been over and they could have moved along. There are a lot of questions sort of dovetail into that. One of which is, why aren't people telling President Trump, hey, look, you had a good run, it's over, here you go. Part of that is they're really afraid that he's going to tank his base, who was extremely loyal, the vote in Georgia, and then they lose those two seats, and then they've got a problem. That they really want to keep him engaged, keep them engaged. One of the side effects, unintended side effects of his disparaging the outcome of the election and saying it was stolen and robbed, et cetera, is a very large number of Republican voters think he's right. And when they think if you think your vote isn't going to be counted or that it's being stolen, you're far less likely to show up to vote. And they're seeing that in the internal polling in Georgia now. And so there's some, non-publicized fear that Republican turnout is going to drop significantly, where historically in Georgia, in these runoffs, Democratic vote dropped significantly. There's no shortage of money being spent in these campaigns. It was billions and billions of dollars on both parties spent, which largely achieved nothing except for neutralizing the other side. That's going to happen there too. But I think it's going to be tight. I think the Republicans should win, but it is certainly not set. And that's part of this discussion about what type of economic help do we get between now and the new Congress, where we really do have a lot of data points pointing to a meaningful economic shutdown, a lot of smaller businesses in trouble, a lot of community health systems like in Texas, where you're in El Paso and other areas where it's just awful, and my heart and prayers go out to those folks. We're having these disruptions, and why doesn't Congress get a deal? So you have Mitch McConnell, who's now come out and said, hey, I'd like a deal as quickly as we can. Now, there are lots of reasons for that, but part of the political case is you want to get that off the table before that January 5th race. So it's not, hey, look, if you give us this vote, we'll get something done. The Republicans can't get it done. We'll make it happen. They're still very far apart. That they will, if they get a deal, it'll be probably closer to that mid-December timeframe. But I normally do prognosticate. I think this one's a crapshoot as far as which way it goes. But I think it's a huge error to assume that the Republicans take it in a walk. Either side could win it by a significant margin.
Fair enough. Really appreciate that insight. And as we're talking about some of the most pressing issues here, talk about PPP round 2 and kind of what does that look like based off of a red or a blue Senate, and can you kind of talk a little bit more about what does the Main Street new loan program look like, and priority and expanded loan facilities from the Fed?
Great question. So the Paycheck Protection Program was written hastily, and it worked. There was an economic tornado coming over the hill. You could see it. You knew it was going to be god awful. It was going to be catastrophic to small businesses, but they didn't know how long it was going to last or how bad. And so I give Congress on a bipartisan basis a huge amount of credit for not encumbering it with too much paperwork. They funded it, they said go, and they could have made it far more complicated, and they could have reduced the fraud by having it far more complicated, by having a lot of paperwork, by having a lot of judgment by the bankers. But instead, they made the informed and painful decision to say, hey, if we have this paperwork, which will protect the taxpayer, the money will get out so slowly that many businesses will fail and will lose 20 to 30 million jobs additionally. So they bit the bullet and moved forward and went. Now, the shutdowns lasted longer than they expected. The economic disruption lasted longer than they expected. The snapback came back stronger economically than they expected. And so that's why they were on the verge of getting a deal in the beginning of August, but they weren't able to. Now we're looking at another cliff, and it's getting a little scary. So what they're looking at for the next version of PPP is they have some time to be thoughtful about it, or last time they did. So when there is a next PPP, what you'll have is a lower dollar amount, and probably won't be $10 million cap. It'll probably be $2. There will probably be some type of an injury standard where before there wasn't, because it was trying to preempt the damage, knowing that people are just going to let people go en masse. It was an alternative form of unemployment insurance and keeping those companies together so they had a workforce so they could pop up. So you're going to have a injury standard this next time. I would imagine it'll likely be 25 to 35% reduction in revenue. And if you haven't had a reduction in revenue of something along those scales, you probably won't be eligible. A lot of the banks hate that because it puts them in charge of measuring it, and they don't want to be on the hook for it. It's more administrative headaches. It's very difficult. I totally understand why they're going with that, but I also now understand why you need it, because many small businesses and medium-sized businesses are having the best year they've ever had because they've been able to adapt. And so they're trying to figure out how to do this. There is a danger, and I've warned both the Democrats and Republicans on this, that if they're too aggressive in that injury standard, they might be funding businesses that are the walking dead, that aren't going to make it. If you have a revenue drop of 50%, you very well may not make it. And so you may be propping, businesses up, but it's only for a couple months. And have you really been a wise steward of the taxpayer money by doing that? We don't know yet, but that's what they're looking at. They're really struggling with the dollar amount. And talking to a number of senators this week, the dollar amount they're looking at originally, again, the two sides are very far apart. The Democrats want several trillion. The small business part they largely agree on as far as the number, but the other amounts are on healthcare issues and largely support the states and cities. The Republicans want to basically reprogram, take existing monies that were already appropriated or set aside that are unused, use those to start, and that's between $300 and $400 billion, $300 $400 billion, and then tack on an additional $500 billion on top of that. So you really have a net of $800 billion to $900 billion of money going out. Not all of that's going to small businesses. A lot of that will be skewed towards specific industries. I've encouraged policymakers as they're looking to help businesses in a PPP to be less industry specific, because there are some travel and tourism industries that are actually doing fine, some that aren't. And there's so many, the American economy is so diverse that picking just specifically industry sectors means you're inherently leaving others out. It really should be focused on specific injury and going from there. For example, if you own a motel and you're next to a national park, you may be having the best year of your life. If you have a motel and you're near an amusement park in Florida, you may be having the worst year of your life. They're both in the same industry sectors, travel and tourism, but it's just different. So they're going to be looking at some things along those lines. The Republicans are looking at sort of some ways to not prop up structural failings that a number of the states have. There are a number of states, particularly New York, Illinois, and other big cities that had massive structural tax and revenue problems, particularly as it relates to a lot of their pension issues. The Republicans don't want to fix those structural problems that existed before, and the Democrats do. So one of the things they're kicking the tires on is having some type of metric where if a state's tax revenue has gone down, then they get a proportional funding from the federal government to help fill that. But it might not be a blank check. It might be a check that goes to a larger federal portion of covering Medicaid, for example, which there's already a federal hook into. The states normally have a 50-50 split between the states and the federal government. That way the money is going to poor people, it's going to healthcare, it's going to women and children, and it would be politically difficult for the states to take money away from poor women and children and use it to fund some, politically, some political project they want to do someplace else. So they're trying to get creative on how to deal with it, but it's a challenge. But I think you're going to see a smaller number. You're also going to see a smaller cap on the size of the business. Publicly traded businesses are probably going to be excluded this time. You're probably going to have a cap of between 200 and 300 employees at the organization. So if there is a PPP2, it'll have an injury, it'll be smaller in dollars, smaller in the businesses. And there's still some questions about loan forgiveness, which is affecting M&A activity right now as far as how those transitions are. But I can talk about that too. But that's a long answer to a short question. So I hope that's helpful.
Yeah, actually, I was going to follow up with the loan forgiveness and kind of the extremely liberal position that the government has taken on for giving a lot of this, the first round of PPP loans. And now it seems like they're starting to rethink, the forgiveness aspect of it. And, as a partner in M&A here, I'm trying to stay on top of, what is the latest kind of terms of the forgiveness, and what do you see, or how do you see the political spectrum impacting the ability to forgive that first round of PPP?
Great question. So I'm going to take away the term conservative and liberal because those words have kind of been blown up in this day and age as far as what means what. But I'll say when Congress wrote the law, it was meant to be as flexible and wide open as possible to help as many small businesses as they can, to make sure there was no unintended tax consequences and go from there. The Treasury Department looked at that and said, that's nice, we're going to do whatever we want. And they put out these frequently asked questions as it related to liquidity, which doesn't exist in the law, and all sorts of other questions that really weren't relevant in getting the loans. They're doing the same type thing in the forgiveness, where there's now an extended 9-page questionnaire of sort of check yes or no on these things for loans $2 million and above. And in M&A, businesses that are involved in M&A, those are commonly businesses that were, if they got a PPP loan, they were in the 2 million or above. Not all, but a good number of them. And it does affect your ability to have change and control. And so there's really some concern about that, because the way that form is written, for example, it asks a question about, do you have more than 20% of your business owned by venture capital, private equity, or other any external entity? And that's something called the affiliation rules. When Congress wrote the Paycheck Protection Act, we asked them to get rid of the affiliation rules entirely and went back and forth. They didn't, but they did give a caveat recognizing the importance of smaller and medium-sized businesses. And they used the small business investment companies as a proxy, saying if a small business investment company was in it, then the affiliation rule was waived. This 20% limit goes away. And that's clearly and explicit in the statute. And that affected thousands and thousands and thousands of smaller businesses, many of which were doing M&A. In this form, there's no box to check saying there's an SBIC in there. And so there's some questions about that. I think there's real questions and concerns about it. We just signed on to a letter with, I lost track of how many hundreds of other trade associations saying you need to fix this and streamline this and not retroactively write rules and change the name of the game. And there's broad support for that on a policy side. The IRS is pushing back lots of different ways, particularly as it relates to the deductibility of the expenses that were forgiven. And I get there are a lot of tax lawyers on this call and tax accountants in the law, who think, yeah, yes, that there's some logic to that, and yes, there is, but it also wasn't the intent of the statute, and these aren't normal times. So I think you're going to have a continuing confusion on that until probably mid-December, when they probably will get some type of a deal done. And if not, it'll be early in the Biden administration. But the longer this drags out, the longer it slows down M&A transactions, because you might have millions of dollars in your books and you're not sure whether that's non-dilutive equity or that's money you need to pay back. And the banks are pulling their hair out trying to figure out, hey, are we going to get this forgiven or not? And so it's a real problem, but we're working through it. But again, this is why private equity funds need to have a voice in Washington. They need to have a seat at the table. The old saying in Washington is, if you don't have a seat at the table, you're on the menu. And so we have that seat at the table, but we need as many people involved as we can.
Yeah, I really appreciate that. I want to kind of shift gears a little bit here and talk about, you had mentioned some of the impact the election will have on the M&A landscape from a pretty broad perspective here. But I want to kind of drill down a little bit here and talk about, what are some of the potential changes to the M&A landscape, such as the extension of the deductibility of interest expense? And do you think that these will impact holding periods or exit opportunities, operating activities, or supplemental acquisitions going into 21 and beyond?
Well, that's a great question. And again, it depends on how these Georgia races control a lot of that. So if these two races in Georgia, and again, I'm not trying to sandbag anybody by saying, if the Democrats win those two races, you're going to get tax increases. It's just true. People may want that, and that's fine. I'll let them make their own decisions on that. But if you get that going up, you could have a couple things that could affect taxes. One, on carried interest. Carried interest was a concept. It never existed in the law. And so when they did the last tax bill, finally they defined it. And when they defined it, as far as your ability to get carried interest, there had to be a 3-year hold. That 3-year hold, now it's defined. Now there's a target. Now it's far easier to change and frankly make it go away. That 3-year hold could go from 3 years to 5 years. A tax increase on capital gains is not out of the realm of possibility, not likely, but it's possible. There are a couple of different ideas that have been kicked around on that, one of which is getting rid of the concept of a 1-year period being long-term capital gains. That's something that you might be able to get some conservative Democrats on board with if they were to make those changes. I don't think you're going to be able to get, go to ordinary income rates at 40, percent or so, even if they win those two Democratic seats, but you could get something that would affect it. There's something called Section 1202, which is something that SBIA was originally was able to get in 2009 up to, I think, 75%, and then we were able to get up to 100%, and then we were able to extend it and make that permanent. There's a 5-year hold for those zero capital gains. that could be, and that's not permanent, that could be at risk. We have to defend that. So how you could structure your deals right now doesn't change, but it certainly could in a number of areas. You also have opportunity zones, which have broad bipartisan support, and I think is something we all can get behind of. Let's make sure there's economic opportunity being presented in real economic terms, not some subsidy, not some prop up, in areas of persistent poverty. The question is, how are they structured? Opportunity zones are structured in a way that it really only works for real estate development. And while I'm not sure if you have folks that are focused on real estate development, that's not really what we're doing. And those are largely short-term job creation because construction's over and then it's just maintenance. But we'd like to see the opportunity zones modified so it facilitates more small and medium-sized investment, which means you've got to change the holding period from 10 years to between 3 and 5 years for those businesses, which does make it far, if they're able to do something like that, and there is some bipartisan support for it, make it far more attractive to expand and grow in areas of poverty and really bring American prosperity to more Americans. So there's both upside and downside in this process.
Very fascinating. Thank you for that. And we understand that you at the SBIA, you cross the aisle and you work with both Democrats and Republicans in a lot of different ways, and you accomplished a lot under the Obama administration, and now working through the Trump administration. How do you see the Biden administration as it relates to what you accomplished under Trump versus Obama? Is it going to be similar to Obama, or is this going to be just a completely different animal going forward here?
It's to be determined. I think the big question is how much will if the Republicans control the Senate, and I think that's probably slightly in their favor that they do, because they certainly can't be less than 50-50. But it's how much they're willing to give him, because Biden has said he clearly has set it up that he wants to be the uniter, and he wants to get bipartisan support. I think he will. He's got a good relationship with Mitch McConnell. If people can talk to each other directly and honestly, you can get a lot of deals done. About 80% of the things that need to get fixed aren't partisan. They're things that just people recognize need to get done. It's a question of how do you do them. And if you're not doing it by tweet and insult of calling someone's mother names and then insulting their family and what their wives look like, what have you, it's a whole lot easier to get stuff fixed. So I think there's going to be opportunity to get some of that stuff done, but they're going to have to decide how much they're willing to let him get done. And so particularly early on. So they're going to be willing to bend, but they're not going to be willing to give him an extended honeymoon. I personally think that it's incredibly important that we treat everyone honestly and fairly. When I worked for Don Evans, Secretary Evans, a good West Texas guy under President Bush, another West Texas guy, the mandate that I was given is you treat everyone honorably and everyone honestly. You tell them when you disagree, you tell them when you disagree, where you agree, and you don't play games. You just honest people can work things out. We got tons of things done. That's been our model at the Small Business Investor Alliance for the last 12 years since I've been the CEO here. And we're going to continue to do that. And most cases, policymakers, regardless of where they fall on the political spectrum or on the geographic spectrum, want to help small businesses. They don't know how. They didn't come to Washington to stab each other and poke each other in the eye and call each other nasty names. They came to fix things. And so they're regularly coming to us and saying, okay, what can we get done? I know you're not trying to change the world. You're not going to, we're not going to fix the entire entitlement system and the entire tax system. Well, what are the incremental things we can do to make it easier for a small business to grow? What are the incremental things that we can do to make it easier to increase access to prosperity, access to capital? What are the things that we can do to remove a little friction from the process? And that's where we come in as experts and as honest brokers that aren't, hard partisan. Again, I've worked for lots of different people, but if you're telling people the truth, it goes a long way in fixing those problems. And that's what we've done. That's what we're going to continue to do. And I think you're going to see a lot of opportunities for making some improvements. I do think that there is going to be a lot more regulation. I do, as it relates to sort of increasing transparency and more of a name and shame to get some of these social justice issues taken care of, whether it be boards of directors or lending numbers or things like that. You're either going to be in the game or not, and then they'll let the public decide. That's going to make some people uncomfortable. Some people will be very comfortable with it. But I think you're just going to see largely incremental You'll still see some big fights that happen here and there, but you're not going to see radical swings more than likely for at least the next 2.5 years.
All right, I appreciate that. We're bumping up against the clock here, but 30 seconds. What can our ACG community do moving forward?
Well, I think the best thing that everyone on this call can do is be involved with ACG. ACG is a fantastic local networking network. Whether it's Houston, Fort Worth, Austin, where have you, where it is. Being involved in your community is the most underemphasized thing that exists out there. Whether it's your local mayorships, city councils, your local business community, that's where the action is. These are your neighbors. These matter. And then more broadly, work with the Small Business Investor Alliance. And if you have private equity funds, join us. And have your portfolio companies join their trade associations, their manufacturers join National Association of Manufacturers, et cetera, and make sure that policymakers hear your story, because we're all stronger together, and we're all part of the same ecosystem. So I think that's what you can do. And again, thank you for all your help, Daniel, and what you're doing at Whitley Penn. Again, please let us know if there's anything we can do to work with you in the future.
Thank you so much. Really appreciate your insights today. Well, that concludes today's webinar. We're now going to move into the networking side of our program. Brittany has put up the link in the chat box to switch over to that. Brittany, I'll pass it off to you for any closing comments.
All right, thanks everybody. Yes, please click the link, join us for networking. Also, if it does not work when you click it, just copy and paste into a new web page. And we will see you over there for some networking. So thank you all very much. Brett, Daniel, thank you.